Hi there, and welcome back to the Metaverse Stock Exchange. In this video, I'm going to break down today's CPI report, go through the numbers, go through the report, and kind of give you a breakdown of what happened and what we can expect in the upcoming months. So let's dive right in. All items, which is the headline number, came in at 0.5%, which is hotter than what we were expecting. Yes, in line because expectations kind of rose in the past couple of days and weeks, but still very, very hot, much hotter than the previous couple of months. And the year over year number came in at 6.4%, which was hotter than the 6.3% that we were expecting. Why that was? First and foremost, food. So as you can see, food rose by 0.5%, both food at home and food away from home. That is a serious problem because although we are seeing a little bit of a slowdown in the uptick, meaning we have a 0.4, 0.5, 0.6, which is lower than the 0.8 and 0.7 percentage points that we were getting back in August, September, October, still 0.5% is kind of increasing on the 0.4% in December, meaning that kind of that pace of increase is now stabilizing at 0.4, 0.5%, and it's keeping ground there, which means it's not going down. So not even close to disinflation, but we're not even getting at a pace where we're at least level. Seeing level would be great, but we're not seeing that both at home and away from home, which is a big problem because everybody has to eat. So food definitely not coming down, and that's a serious problem. We were hoping that that category at least would come down a little bit. Next category is the energy category, and you can see we have multiple kind of fields in energy, but the headline number in energy right here is 2%. And this was something expected. I talked about this in my previous CPI video that I made a couple of days ago in anticipation to the report, where I talked that energy costs have gone up from December, and this is going to continue. So now prices during the month of February are even higher than the month of January. So this number we are expecting to continue rising. Maybe not at the 2% level. That is a pretty big kind of increase on a month over month level, but keep in mind that we had a very big decrease in December. So that's why we're getting this number, and we are expecting a pretty big number for next month. So that's the first hint there that we're still right there expecting a higher number for next month's inflation report. It will be important because as we see, we are expecting inflation to slow down, but so far in the first two kind of lines here, both food and energy are not slowing down. Next on our item is food, all items less food and energy, which is the all important kind of core measure, right? And even that came again in line at 0.4%, but on a year over year basis, 5.6%, which was hotter than what we were expecting. We were expecting a lower number than 5.6, but 0.4 wasn't in line. It is still in line with the previous months, but still not coming down and not even being at flat, but we still have that kind of month over month increase, which if you analyze, which means 0.4% times 12, that is 4.8% on an annualized basis. So even core CPI is not coming down, or at least staying still or being at level. So even if we exclude the volatile food and energy, core is still pretty high. But we cannot exclude, because as the Fed chairman said in the last press conference, he will be looking at the headline number. Let's see what we have. So X food and energy in the core kind of categories. In the core categories, we have some goods which are vehicles. They have a big weight in the overall system. We have apparel, and then we have the services part of the economy. So new vehicles rose by only 0.2%. That's good, and we are expecting these numbers to kind of go a little bit down because we did see a lot of price declines, or at least in the electric vehicle space there was a lot of kind of price declines or discounts from the manufacturers. We're going to see if other cars, if other new vehicles see those price declines, but that's a little bit of a good news. Also, I did talk about in my previous video that used cars we're going to come down this month as well. That's also true here. We have minus 1.9%. That is a pretty big impact on the overall index because used cars has a pretty big weight of 5% of the overall index. In declining by this big of an amount, it is dragging the entire index lower. And keep that in mind that this will either slow down, or I am expecting either neutral or even prices to jump up a little bit in the next month. Again, it's too early, but keep that in mind that this number that is dragging the overall inflation lower is going to change. So that's another indicator, alongside that energy prices are continuing to go higher, then used car prices are either going to level off or even increase a little bit, which means that that's also going to be pushing inflation higher. Next on the docket is apparel, and apparel caught my eye pretty much because it was steady for multiple months. As you can see, like 030, minus 02, then 01, 02, which is all really good news. And now all of a sudden, a 0.8% increase on a month-over-month level. That is pretty big for apparel. I don't know why that was. Maybe we had a lot of discounts for holiday shoppers during kind of the pre-Christmas and then Thanksgiving, Christmas, New Year's, all of that. But that is a pretty big jump in apparel, and that's something that we do not want to see. We would like to see at least level or going down a little bit, because it has run up very much. So again, another number that is not good news. Next in line is medical care. And this is important because medical care here we have it at plus 1.1%. But if we go all the way down, we have medical care services at minus 0.7%. And this medical care services has a pretty big weight. And I'm surprised because I looked through the report and I saw that hospital care rose. I saw that uh, prescription drugs rose, physician visits rose, so everything pretty much rose. So I don't know how they got this minus 0.7% number in the medical care services, but it is something that is dragging the index downward. So we will see where it's going to come up with. But that is another number very similar to used car prices that I do not expect that to continue, which means that even if it levels off, it could push overall inflation higher. And then we have the first most important factor, which is shelter. And shelter got a higher weight in this year's CPI. That's still at 0.7%. That is very, very big. I was expecting this number to go a little bit lower. We did have 0.8 the previous month. We did have 0.6 the month before. So 0.7 still very, very big. We are expecting these numbers to come down, but when that will be the case, we do not know yet. In the very last, transportation services, we have that 0.9%. I did talk about this as well when I said that when kind of energy prices go up, when gas and fuel goes up, transportation services go up as well, and that was proven correct in this report as well. So all in all, pretty bad news for this month. And also, kind of as of right now, there is still a lot of days in the month, so we're going to see what happens. But as of right now, pretty bad news for the next month's inflation report as well. Thank you so much for watching, and see you in the next video.